Welcome back. Well, the Nifty has come off the high point of the day. Big boy Reliance Industries, that's the stock you should focus on. So that one has come off the high point of the day, and that single-handedly actually has pulled down the Nifty. The intraday chart comes up for you. Reliance Industries collects more than 2% from the high point of the day. And not just that, crude oil prices have moved up as well. So that's not great news for OMCs. BPCL, HVCL and IOC, all three of them have come off the high point of the day. But let's move on, and as promised, Ramkrishna Forgings, that's the next stock on our radar. Remember, there were huge trades that we saw in Friday's trading session. We have with us Mr. Naresh Jalan, the MD of Ramkrishna Forgings. Hi, Mr. Jalan. Thanks so much, sir, for joining in. Wanted your sense, sir, in terms of, that we are seeing a bit of a slowdown in terms of the CV cycle. Is it impacting your business? Are there any visible signs out there, or are you booked, till the top, running at full capacity utilization levels?
We are running at full capacity utilization. There is some slowdown. I think it is one-off incident due to this NBFC liquidity tightening issues. But this may be only one-off issues. But as such, we are running to full capacities.
Okay, you are running to full capacity, Mr. Jalan. If you could tell us a little about commodity prices then, because, we understand that commodity prices have come off. And the next quarter, would there be a hit on your margins given you are carrying high-cost inventory, or are you carrying high-cost inventory?
No, we are, but for commodity pricing, I think alloy steel pricings have not taken a hit.
Okay.
It is stable since last 2 quarters, and neither it has moved up nor it has moved down. So I don't think we are going to have any margin hit due to commodity pricing.
Mr. Jalan, I've been speaking to a few steel manufacturers, and they indicate that either today or in the next few days, they'll have to adjust their pricing because Chinese prices have fallen down. If that is the case, the benefit of that will flow in when? In quarter 4 itself, because you would have some inventory with you. Is that correct?
Yes.
All right.
I think that benefit will come quarter of FY20.
Okay, in the fourth quarter of FY19, right? In case there's a price cut now, you'll see the benefit. Okay, we'll take that point. Wanted to understand a more basic fact about your company, Mr. Jalan. Tell us how much of your sales is dependent on the North America truck sales that we track. As a percentage, if you could give us a rough range.
Around 26%.
26% of your sales is dependent on. Then how much of and the remainder of your sales is dependent only on the CV cycle in India?
Yes, CV cycle in India and Europe also.
In Europe. Europe accounts for how much of your sales?
It was this year close to around 5%, but going forward it is going to go to close to around 10%.
So safe to assume that 26% is dependent on the North America sales, around 5 to 10% is dependent on the European sales, and the remainder is on the domestic CV cycle.
Yes.
Is that correct?
Yes, correct.
Okay, all right.
All right, fair point there. Mr. Jalan, you had some capacity expansion plans. If you could tell us a little more about them. When do they come on stream? And what is the difference between the current plant and the new plants that you're building?
We are about to start our capacity expansion of close to around 50,000 tons metric ton addition in capacity. And this is going to start production from first quarter of FY20 and get completed by almost another 1 year time. And basically this capacity augmentation is being done to cater to requirements of passenger vehicles as well as light vehicles. Basically in both in PV and LCV we would like to venture into.
Okay. So Mr. Jalan, to get that point right, this benefit will not be seen at all in FY20. It's a story of FY21, this expanded capacity.
No, part benefit will come into FY20. Okay. Because first quarter of FY20 will start production, part commercial production.
Okay.
Close to around 40% production is going to be on stream in FY20.
Okay. And
balanced production is going to come in on stream in FY21.
Interesting. How much of money have you spent on this? Your current capacity is 150,000. You're telling us that this capacity will be around 50,000. Is that capex already done?
No. Capex has just started. We have close to around right now work in progress of close to around 100 crores. And total capex is of close to around 482 crores.
482 crores. So another 300 crores is what you require. How will you raise this? From internal accruals or from you'll be raising debt?
Part of internal accruals and part is debt.
How much of debt will you raise?
Around 40% debt and 60% internal accruals.
All right. So 120 crores will be debt.
Yes.
All right, 120 crores of debt is something that you'll be raising. So let's talk about your long-term prospects for the company. You had given us guidance of about 22 to 24% margins in FY22. This compares with just sub 20 that you did in the previous year, as well as 80 to 90% growth in the revenues by FY22. Would you maintain these things or maybe up them or downgrade them?
No, we are maintaining those guidance.
Okay.
Fair point.
You know, Mr. Jalan, I wanted to ask you one more quick question. You were talking about PVs and LCVs. You know, this new capacity will cater to both these two segments. I believe that you've received some LOIs, some kind of interest from some of these PV players. Is that correct?
No, we have received interest from LCV players.
LCV players, okay.
Yes, we have not yet received interest from PV players. We
Okay.
are already in discussion with PV players. We expect some concrete things to happen in last quarter, means starting January.
Okay,
2019.
and from this new capacity of 50,000, since it's going to deal with LCV and PV, will it be margin accretive? I believe that this new capacity will be a mix of hot and rolled forgings, and currently you're doing more hot rolled. If you could explain to our viewers and explain to us as well.
It is basically going into a warm and rolled.
Okay.
Basically, it's hot, warm, cold and rolled forging. Means there are three different segments which we are entering into.
Okay.
So all the three segments.
So, Mr. Jalan, let's keep the technical factor out then. Will it be margin accretive?
Yes,
It'll be better margins than what you're doing currently. So that's what helps your total margin picture?
Yes, it's going to be margin accretive.
To the tune of what? 100 basis points, 50 basis points? How much better is this PV, LCV?
We are looking at, it is not all about PV. It is basically what we are putting up is going to be one of the new technologies in India and is going to be bringing a cost advantage to the OEs also. So both these taken together, we feel that at least 100 to 150 bips it's going to be margin accretive for the company.
And that's baked into the guidance that you've given already?
Yes.
All right. Thanks a lot, Mr. Jalan, for joining us and giving us all those details. Before we wrap up the show, just keep an eye out on Interglobe Aviation. That one's given up about 6% from the high point of the day, opened in the green on account of the fact that aviation turbine fuel prices were cut by about 11%. And now, in the wake of crude prices moving higher as the OPEC meet is underway, Interglobe Aviation has given up all those gains, sitting at the low point of the day. Along with that, we have tire stocks also not doing too well. Apollo Tires is the one that should come up for you at the low point of the day. Higher crude not doing too well for them. And not many cars selling, not doing too well for them as well. With that, I believe it's a wrap on this edition of Chartbusters. You stay tuned to CNBC TV 18. Trading Hour comes up next.